That's also a key element in making trade decision, just the same way we have our zones. Sorry, our strong zones and our weak zones. Now, this was a GJ trade sent to our billing community today, and that particular trade did like 53 pips. So today, and it's still giving another opportunity for another entry. This was where we took from, then waited all the way. It came down. I think it came down. It was here, 53. It was 53 pips, anyways. Yeah, no, that was not a trade. Anyways, we did a 53 pip move today on this particular one. This particular trade, I think we entered somewhere here. It was on the top here, down. So now those zones are very, now it's not like 100% all the time it happens, but it does happen like a lot. So now let's today we're going to be talking about let's talk about firstly how to draw trend lines. Now we already have our trend line 2 to your left. You're going to see the 2 here. This is the trend line 2. Now the trend line just connects to the two points. At least you have to have 2 points of connection when it comes to the trend line. So let me go to the weekly time frame for Euro USD. Okay, so now if I want to draw a trend line for this particular one, this is it. I'll start from here. At least 2, that's to connect 2. Now there are some people that will draw from here. This is also correct. You can also have what we call like inner trend lines, inner trend lines and all that. Sorry. Can you see my screen? Can you see my screen?
So it stopped now.
Okay. Let me. Okay, so we have inner trend line. So I can have this outer trend line, and then I'm also correct when I draw this. Just know it should have a minimum of 2. That's the 2 recent what will you call it now? Do I call it the 2 um I, I'm trying to recall a name to call this now. Anyway, I'm talking about the 2 the 2, okay, the low for two connecting points, 2 recent lows. So the trend, let's just define it that way. So the trend line should be able to connect at least 2 recent lows. Okay. So we have this, we have this. Now there are people who trade channels. This can also be, they can also do something like this. This is also a trend line. This is also a trend line. Now this trend line, they act like kind of like diagonal support, and also it can also act as diagonal resistance as well. Okay, so you can see price respect, it comes here, respects this, like that, like that, like that, like that. So that's the purpose of trend line. Okay, so we have this one. This is also a trend line. This is a trend line. You can see this. It's more like price respecting an invisible stuff, invisible resistance and all that on its way down, like a channel. So that's what a trend is. All right. So now that we've established that, today's class, I think is one of the easiest, most important, but kind of easy to get. Now, we're going to talk about market curve. Now, market curves, before we talk about market structure is the is the most difficult, not really difficult, for a new person. Let's talk about market curves. Now, market curves and zone in control is very easy. Curve is just about the highest peak. That's the peak of a particular stuff. Now, this is when price comes here. This is the monthly time frame. So we can say price already at a high curve here, because if you notice this price, this takes 1 month for all these candles to form. So this particular price 1.23161 is a high curve area for Euro USD. You can see another zone around here. So if price is approaching here, we can say price is already at a high curve. So what we'll be looking out for, we'll not be looking to buy, we'll be looking to sell because of previous reactions at this zone. Price came here like 1, 2, 3, 4 times, and then came back here and there was a rejection, came back here, there was a rejection. Okay, so this is also a high curve for this particular pair, this particular 1.5. This is also high curve for this zone here, 1.500 stop. So the curve is just about the high point, and then also, of course, low curve, the low point. So price coming here, you can also say this is a low curve area for this particular pair. All right, because of, you can see this, a lot of reactions here as well. So that's what the market curve is about. This is a low curve for this particular low curve area for this particular pair. Okay, then zone in control is very is just simply a zone that has not been broken. For example, until this zone gets broken, this is the zone in control for Euro USD at this particular time. Okay, so once a zone gets broken, that zone is no longer in control. This zone is still in control because price came here and then it couldn't break through. It came here, couldn't break through, came here. So this zone, remember we trade zone to zone. So this particular zone is still in control of this pair of price right now. Okay, so this particular zone, when you come, this demand here is the zone in control at this particular point. This zone you have here, everything here. You can see price didn't break it, came back, price didn't break it, came back, it didn't break it so many times. And remember, this is a monthly time frame. Okay, so this zone was in control for a long time, this demand zone, until price finally broke through. Okay, so that's what we mean by zone in control, market curve, high and low, the high and low point of a particular pair. Now, once price is approaching a high curve, you should not be looking to buy. All right, if it's bullish, it's a bullish move, you should be looking out for sell. So you have to now start looking out for the supply areas in those particular area. Sorry, that particular pair, and then look to get confirmation to sell. All right, we're going to have a class where we're going to talk about market confirmations, what you have to look out for after identifying your zones and all that, market structure. It's more like the market, what's it called now, your trade score, everything you have to look out for before you take a trade, the confirmations you need to get. That will kind of like give you an increased or higher rate to higher probability rate when it comes to success, as winning a trade or losing a trade. Your trades will be, you have higher win rate rather in your trade setup when you follow these particular rules. Okay, so now the final one which we're going to talk about today is the market structure. Market structure in Forex is like almost everything. To get your market structure right, you have a higher probability of winning that trade. But when you don't understand market structure, you can easily lose a trade. All right. So now what is market structure? Before I talk about market structure, we are going to talk about uptrend and downtrend. Definition of an uptrend and a downtrend. So we're going to define an uptrend first. Number one, a trend is said to be an uptrend. Uptrend because you don't want to be selling when the pair is on an uptrend, and you don't want to be buying when it's on a downtrend. So for an uptrend, we have a series of higher highs. Price is going to be forming a series of higher highs and higher lows. While for a downtrend, price is going to be forming a series of lower highs and lower lows. For supply and demand, we have an additional for supply and demand, low or down, sorry, up or downtrend. We have an additional definition to this. Price number one, price breaks a trend line, and takes off an opposite demand zone. Okay, this would be a downtrend. So we cannot say price is on a downtrend. Then for the opposite, for the other one, uptrend, price breaks a trend line and takes off an opposite supply zone. So we can say that that particular price is on an uptrend. Okay, so keeping this definition in mind, let us now go to the market. Please, understanding this particular one is very key. So please let's pay close attention. All right, so series of higher highs and higher lows. Let's go to the daily time frame or the 4-hour time frame to check this out. What is Euro USD doing? Now, higher highs, higher lows, this is how it works. This is higher high. Let me see if I can do that on the whiteboard first. How do they even use this thing? Let me draw it. Okay, so this is rise. Okay, perfect. It's like a staircase. Now it starts from this particular point. This is a higher high, and then it makes a low. But this low it makes is going to be higher than the first point it started from. Then it goes up. So just imagine a staircase. That's what you call an uptrend. Okay, so this is an uptrend. So this is a higher high. This starts from here, and then it creates a starting point, and then creates a higher high. Let's use HH to represent that. Then also we have a higher low. This is another higher high, higher low. This particular low is higher than this one. That's why it's a higher low. Just like that, higher high, higher low. Anyway, you understand? Let me not write everything. So higher high, higher low, higher high. So we say this is an uptrend. So price is on an uptrend, and on an uptrend, what do? You're not looking to sell. You are looking for buy. So you're going to be waiting for maybe a retracement. That's what we call the demand zone. So you have to be waiting for the strong zone at this point. When price retraces to the strong zone, get your confirmation, and then you enter the trade and buy. All right, and just hold it till your take profit target point. So that is the uptrend. Now the downtrend, we have this, we have price coming from here, starts from here. This one is too small. Starts from here, okay, and then it starts dropping. Lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. So that's a downtrend. All right, so we have, this is okay, this is the, we call it the high, okay, because this is where it starts from. Let's say high, okay, then we can call this the low of that particular move, okay. Sorry, this is actually the high, this one, this is where it started from. Okay, then we have the low. Then we have a higher low. Sorry, lower high. Lower high. This one is lower than this particular one. Okay. Then we have descending. That's your descending staircase. Uptrend is your ascending staircase. So it's easier to understand like that when you picture like that. Okay. So we have a lower low. Lower high. And then we have a lower low. Lower low. And all that, lower high, lower low. So this is what we have as our downtrend. Downtrend. So the uptrend is like your ascending staircase, and then the downtrend is your descending staircase. Okay. All right. Now that we have that, let's go back to our chart and let's see how this plays out in the real market situation. You can see the chart now, right? Not the whiteboard. Can you see the chart, or is still the whiteboard that's showing?
We can see the chart now.
Okay. All right. So now you can see this particular Euro USD right now is on an uptrend. Why? Because we have our higher high, series of higher high, higher low. Now it's not going to be just be like exactly like this, boom, 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 boom. No, but you can see it, each high like that, higher high, higher low, higher high, higher low, higher high. So we can effectively say that this particular pair is on an uptrend. So when you want to draw your trend line, you can see your trend line will also help you. So this trend line also helps. You can see is an uptrend, ascending. Now let's look for a downtrend. Now this is it. This is a downtrend. Series of lower highs, lower low, lower highs, lower low, and you just keep descending like a staircase. All right, so this is the definition of an uptrend or a downtrend. Now, for the demand methodology with that we trade, which is supply and demand, there's an extra addition to this. Let me take this here. So now we have price for us to say price is on a downtrend or uptrend in supply and demand. Now there are some cases where it might not, the market might be choppy, it might not really be, drawing a trend line might not really be so feasible. Another way is for it to take or takes off two, that's to take off two opposite demand zone where there's no possibility of drawing a trend line. So the same applies for this other one. Opposite supply zone. Takes off two opposite supply zone when there is no possibility. So when you're not able to draw a trend line, once you see price take off one or two opposite zone, you know that, okay, that trend is now going on the reverse from what it is. So now let's look at this particular one based on our definition. We already have a general definition of uptrend: lower high, lower low, lower high, all that, higher high, stuff like that. Now, for this particular when this particular trend change, now we had a downtrend right here. All right, so now let's look at our supply and demand additional definition. Now we had a trend here, and then let's look out for this was a trend line, right? We had a trend line come all the way here. Now, since we're on the 4-hour time frame, remember we said that what you just need is just the last two points to connect the last 2 points. So this will be our trend line for this one. Let's take this off. This will be our trend line for this particular. Now forget that all this other place they happen. Let's forget about this other one. We're focusing on this particular, just this two here for now. Let's forget this happened already. All right, let's forget all these areas. They happen. This move has happened. Now, we draw a trend line. These 2 points here, when price dropped and all that. These 2 points. Now, at this point, now for us to say, okay, price is now on an uptrend, there has to be a break of trend line, and then it has to take off an opposite supply zone. Okay, there has to be a break of trend line, and then it takes off an opposite supply zone. So we cannot say, okay, this particular trend pair is now on an uptrend. So now let's see, this was okay. So this is our supply zone. Let me label this. This is our supply zone. Okay, let's take this off. I think it's making it look complicated. Okay, this is our supply zone, right, on the 4-hour time frame. Also, it's good for you to label your time frame so you know what, because every time frame is unique. That's zone supply or demand zone. Now, these are 4-hour supply zone, right? Now, okay, once we'll send a link once this goes off. Now, price, you can see on the 4-hour we had a downtrend, right? And then price came and broke this up, broke this particular, took out this, but broke. Number one, trend line was broken, and then an opposite supply zone was also taken out. All right, so now we cannot say, okay, Euro USD, based on the 4-hour time frame, Euro USD is now on an uptrend. So at this particular time, we will not be looking to sell this pair anymore. We're going to be looking for a buy. Or do you understand? So we're going to be looking for a buy. So now what to do is we now wait for price. Anyway, we're not getting to this part, how to enter a trade. We'll now wait for price to return back to this particular zone. The particular move that broke this trend line. All right, which was this. This was the move that broke this trend line. This particular move here. This zone is what broke that trend line. Sponsor the move. You can call it sponsor the move that broke that trend line. Okay. So you don't just say, okay, price has broken it. Okay, let me buy. No, that's that's one of the rules of entering a trade. So you wait for once you see price breaks this, say, okay, fine. Once is so that means this is a strong zone, because this is the zone that took off, that sponsored the move that broke this particular supply zone on the 4-hour time frame. So whatever time frame you are trading, it has its own supply, it has its own demand. You have to use this same principle to get your entry or to define your trend. So now price has broken this. Now this is a strong zone here. So we'll wait for price to come here. This is a strong demand zone. So we waited for price up. You can see price returned back to this place and went up, came back. Of course, you can test as many times as it wants. All right. So it's not just once. Sometimes it might just come back once and just shoot up, bam. But sometimes you have to be patient to retest another. But you already know it has met your requirement for a buy. That's it. So you buy and you hold. So price came back here, tested this, and then bam, price went up. Okay. So now let us check another trade setup. You can see it happens in different. The market always repeats itself. Let's look at this particular GJ setup on the 1 hour time frame. Now, GJ actually is an uptrend, okay, but you can also have reversal. Now, how do you trade reversal? The same principle. On the 1 hour time frame, for this particular one, we're looking for 1 hour time frame, 1 hour time frame, 1 hour time frame. Break of let me not call it break of market structure. We've not done market structure. Anyway, we're already doing market structure. We're already talking about uptrend and downtrend. So that's part of that's actually market structure. Identifying what trend a particular pair is on. If it's an uptrend, if it's a downtrend, and then we're also defining it based on supply and demand. When does this particular trend change to? When will it change to? If it was on an uptrend, when can we say is now a downtrend, and when can we say is now an uptrend? So when you look at this particular pair, you can see we have an uptrend here, right? Higher high, higher low, higher high, higher low, higher high, higher low, and all that. Okay. Now we are connecting first the two. Let's just focus on the two last points. This is it. Okay, this is it. So this is an uptrend, right? Now on 1 hour, now you can see price came higher high, and then it failed to created a higher low, but then price failed to create a higher high. All right, and then we're looking out for that. We're looking out for price to break below this. Now, actually, this particular pair, it does not is not yet a downtrend though. It's not yet a downtrend. It's a reversal. Yeah, we're expecting a reversal, but one requirement only has been met. Okay, we have a break of trend line, but notice we do not have a break of this particular zone here. Now, for us to have a break, this is not this wick does not count. It has to be a full body close. A full candle has to close below it. That's this particular candle. It has to close below the body, not the wick. All right. So it has not yet closed below. You get it? It has not yet closed below. All right. So now the first requirement has been met. Price has broken this
I didn't understand what
line.
you meant by close below. Sorry.
Sorry?
I didn't understand why you say it has not yet closed below.
Okay,
There.
now we have these candlesticks are like this, right? We have a candlestick like this. Then you can have a wick. Let me use this
Yeah.
as a wick. All right, this is a wick, right? So that means price came, this is the opening price. Price opened here, and then maybe went up. All right, open, went up, and then market move came, price came here, but it not closed. It now went up and closed maybe here. This is why you
Yeah,
have your
sure.
full candle. So now, for us to say that this particular price has broken this candle, it has to be something like this. Sorry, it has to be this full body. We have to have a full body close. Let me just put it this way. So it has to close like this. You understand? That's to close below it. Do you understand?
Okay.
Not the wick. Now, if you notice here, we have the wick. The wick was below this zone. This is the zone we're looking at here. In fact, this is because now when price is above, we look at the wick as well. This is the zone we're looking out for. You can see price wicked just below it, but we don't have a full candle close below it. Okay, so we cannot say that this particular pair is a downtrend yet based on the 1 hour time frame. All right.
Okay.
Now, on when you just say higher high, higher low, higher high, higher low, on the first definition, just the general definition, everybody knows higher high, higher low. They'll tell you, okay, that GJ is now a downtrend. But based on supply and demand, traders cannot say that, okay, this is a downtrend, because, and that's why, if those who have mastered supply and demand strategies, rules, they are more successful in trading because of these rules that they follow. Now, they cannot say it's a downtrend yet because it has not fulfilled the second requirement. It has not taken off this this demand zone yet. So we wait for price to break and close below this zone. And that is not enough. We don't enter the trade yet. We wait for a retest of that move, of that zone, which is now a strong zone that sponsored a move that broke this, that closed below this particular demand zone. That is where we now take our entry from, and then we can now sell. So our target, when we are selling, our target will be the next zone. We're targeting the next zone because we trade zone to zone. So we're targeting the next zone to take our profit. Okay. So that's it. So let me look for another example where price actually fulfill that. Let's look for another example. Let's look at gold. Let's see gold. Do we have anything on gold? Okay, look at this. Now, this is the trend line. This is the 4-hour trend line. Okay. This is our zone here, our supply zone. Let me take this first. You can see this is our supply zone here on the 4-hour time frame. Then price broke this trend line, requirement met for a